Well, joining me now with his analysis of market moving activity at midday is Muhammed Wagley from Sasfin Wealth. Muhammed, hi, good to chat to you once again. Okay, a different picture today, regaining some losses after yesterday's bloodbath.
Ray, always a pleasure to be on, and I must say a relief to be on today and not yesterday.
Yeah.
My word, it was terrible, red across the board. And yeah, you mentioned, the resi, the resources are back up about 5%. That's near half of what they lost yesterday, So just to sort of put that into perspective, we are coming off low bases. And it really does seem that that resi performance is really what's driving performance here. You did mention the platinum as well. They were back up about 3.5% after losing close to 10% yesterday. And we are seeing that reflected in the platinum counters that you mentioned. So yeah, much better day than yesterday, much prettier picture. Let's hope this continues. Of course, there are, quite a few things in the background that are, causing this volatility, and they actually haven't been resolved yet, but much rather be commenting on a green day.
Yeah, it's a green day today, but what worries many is the Rand, and the Rand has lost value. We have the US Fed meeting in 2 weeks' time. We have our own MPC meeting in due course. Where does this leave interest rates? I mean, just last week we were looking at interest rates perhaps coming down. Could go the other way now.
Well, I think a lot of that depends on, how likely what we're seeing in Iran is to, be sustained. If the stoppage of the Strait of Hormuz, which transports about 20% of the world's oil, continues indefinitely, we are going to see impacts, in the short term. I think, we're likely to see that probably in the fuel price next month. But, the longer this lasts, the less likely that, inflationary effects, they are going to be transitory. And then the narrative around the rate cuts are actually going to completely shift. I think we'll stop hearing about cuts and you'll start hearing whispers about hikes and things like that. So it really does seem like it's in everybody's best interest to have a bit of, closure here in terms of the conflict there in Iran. The likelihood of that happening imminently doesn't seem to be, quite high. So yeah, the longer this persists, the more likely it is that we'll have sort of negative news from a rate cut perspective, from an inflation perspective. So yeah, let's see what happens. Everything is very touch and go at this moment.
Yeah. All right, let's take a look at some results from today. Woolies have got their results out. Not too bad.
No, not too bad at all. I think what I liked was the fashion. The apparel segment seemed to be doing quite well. Usually the food does well. They did point to the festive period, Black Friday and things like that. They increased their dividend, but the fashion was under quite a bit of pressure. To see a bit of a pickup there, is quite encouraging. And obviously, and not just Woolies, but I think the retail sector in general, has been under a bit of pressure. And that's, I think, in turn been putting pressure on Woolies' margins. So if there was one thing that I would somewhat be concerned about, it would probably be that. But, ultimately, I thought these were, quite a good set of numbers given the context.
Yeah, quite right. Cash build out, okay, 2 and 3%, but solid results anyway.
Yeah, solid performance as well. I thought this one was quite interesting. It really painted a picture of, the market not really expecting too much. We mentioned Woolies in a tough environment. DIY home improvement is in as much of a tough environment as well. And cash build, I think the top line, the revenue was up around 6-7% there or thereabouts. But the bottom line, the operating profit, rather, was down about 3%. And I think, again, probably just paints a picture of, the market wasn't really expecting too much there. And I think, the broader context of a tough environment probably gave credence to it. Again, look, it's a small company, so there wasn't that much movement on the share today. I saw probably a R500,000 worth of trade. But yeah, again, I think it just comes back to, the context going into the results and the company coming off lower bases.
Yeah. Then we got the RMB BER Business Confidence Index. It's so interesting to watch these indices because it shows that the confidence is there. They're sliding up and down, but by little bits.
Yeah. Well, that one's very much sort of hot off the press, but I will say, Ray, it's not a surprise to me, that it has improved a little bit. But one has to remember, what with everything sort of going on in the background, the weaker rand, the potential for higher inflation, higher fuel costs, so it's not a surprise to me that these numbers were good, but that context needs to be noted, and is going to be sort of a dampener on performance going forward. I don't think too much of what has happened in Iran and the sort of aftermath of that, would be reflected in the numbers that we saw earlier. That being said, a lot of this was driven by, the same things last year. We went off the grey list. The credit ratings, we saw sort of an upgrade there from the S&P, and generally it's been relatively stable locally. So those trends are still sort of in our favor. It's just now sort of things that are not really in our control, which will probably serve to put pressure on us going forward. And you can't ignore those things.
Yeah, these are the things that we are not in control of. That's the bottom line. Let's be honest about it. And we saw that yesterday. Everything was going well, and then all of a sudden the rand just skyrocketed. It's such a difficult thing to predict, isn't it?
No, absolutely. It's been quite volatile. I think we've been fortunate in that, it's been quite strong for the better part of the last year. But again, there's been a flare up in the Middle East, as you say, nothing to do with us. And, there's been implications there, from a safe haven perspective that have negatively impacted us. And, the reality is we are somewhat used to the volatility. The stability that we've had over the past year or so is, more the exception than the rule in that case, at least with reference to the rand.
Yeah, right. Hold that thought. Now, before we move on to your stock pick, let's reflect on the counters your industry peers are banking on at the moment.
We've been quite favorable about SA Inc. at the moment. We think there's a lot of opportunity, specifically in the mid-cap space. So we like Italtal at the moment. I think it's pretty much trading at levels was at COVID or about 12 years ago as well. Very strong cash generation, very strong management. The business is going through a difficult time at the moment, but we are backing them that they can trade themselves out of that situation. And if economic activity picks up to 1.5 to 2%, we think they will start growing the top line again, and then the business will be very well positioned.
It is a business based in Kazakhstan, and the shares are listed in the US. It's called Kaspi. They operate the biggest fintech platform in Kazakhstan, so everything from banking to e-commerce, buying a car or a house, making payments, anything you can think of. Kaspi's platform is dominant in Kazakhstan. And then about a year ago, they bought majority control of a similar business in Turkey. That business just didn't have a bank. So then they then separately bought a bank in Turkey, and they're busy integrating those two businesses.
Muhammad, I don't know much about Kaspi. What are your thoughts?
Well, Ray, I don't know too much about many Kazakh companies either, but you know what? This one is quite interesting. And look, I can't claim to have followed the company, extensively, but I follow a company that's not too dissimilar from Kaspi in South America. Now, essentially what they do is they run sort of an e-commerce platform. Anything you need to get, you would get from there, almost Amazon, of Central Asia type of thing. And, in that respect, I think why these guys would have an edge over something like Amazon is that, they would have got in first with the infrastructure and the logistics of it. It sounded like, a lot of what your analysts liked about the share was the idea that they could replicate what they've done in Kazakhstan in Turkey. If that plays out, and there isn't sort of much reason to, bet against it, but if that does play out, there'd be massive, massive upside here. But, given the geographies, given everything that's going on, I think you'll need to give this one time. But, from a sort of helicopter view, very interesting, looks very good.
Right, Italtal. Now, I've been chatting about Italtal quite a bit over the past week or so. It's been given the thumbs up and the thumbs down. How do you see it?
Well, look, I think just looking at the space as a whole, it is attractive. Retail in South Africa is looking quite attractive. We'll take those consumer confidence numbers, I think, with a little bit of a pinch of salt, but ultimately, the trend is that, we are seeing a bit more confidence, consumer confidence in the economy. As long as that, continues to improve, I think Italtal is actually quite well positioned to benefit from that. Analysts mentioned, they've got a solid management team. They've got an incredible management team, and they are, I think, in in my mind worth backing. It's just if we see softness there, I do think it'll be more a case of, the broader market than it would be sort of Italta.
Yeah. Right. So where are you hanging your hats this lovely lunchtime?
Well, I suppose I'm playing it safe. I'm going to go for Process, and there's a few reasons for it. We all know the company is one of the biggest on the market, on the JSE, and, you get your massive 10-cent exposure. 10-cent itself is trading quite cheaply. Then the share Process is trading at a massive discount to NAV. They're close to their 52-week low of about 720 Rand per share. If you look at the potential upside here, I think this is a great opportunity to get one of the best companies on the JSE, and that too, pretty cheap as well, so it does seem a bit like a no-brainer. I have to disclose, look, you do have that China risk that's not going anywhere. There is that weak demand, but you know what, even within that context, this looks incredibly attractive. So yeah, I don't know who doesn't have any Process, but if you don't, now's a good time.
Yeah, 52-week low is going to go up. Nice one, Muhammed. Thank you so much for joining us on Business Lunch. Good to see you once again. That was Muhammed Wagley from Sasfin Wealth.